Welcome to the China Memo, where we work from long-term trends, not headlines and noise. In this first episode, we are looking at a company some commentators have called China's Nvidia, more threads, and at what it reveals about Beijing's attempt to build its own GPU ecosystem under US export controls. If you care about where AI, sanctions, and Chinese industrial policy intersect, More Threads is a useful place to start. More Threads was founded by a former Nvidia China executive and positions itself as a homegrown GPU and accelerated computing company. When it listed in Shanghai in late 2025, its shares jumped sharply on debut, briefly putting its market value into the billions of dollars equivalent. From a distance, that sounds like another hot tech listing. But for allocators and operators, More Threads is more interesting as a signal. It shows how China is trying to build its own GPU capacity, how domestic capital markets are being used to fund that effort, and where the constraints still are. Before we continue, this content is for educational and informational purposes only. I'm a market observer, not your investment advisor. Nothing here constitutes financial advice. First, what does More Threads say it is? In its own materials, the company describes itself as a general-purpose GPU and accelerated computing firm, serving data centers, workstations, and consumer graphics. It talks about GPUs for AI inference, cloud gaming, digital twins, and industrial simulation. It emphasizes being a general-purpose GPU platform rather than a narrow fixed-function accelerator. It also leans on phrases like controllable, which put policy resilience right into the product story. In Western coverage, you often see performance comparisons and speculation about whether a given Chinese GPU can match an Nvidia part. Inside China, the first question is often different. Is this good enough to serve priority workloads with acceptable risk using domestic supply? That framing matters because it tells you how Chinese buyers and regulators might evaluate More Threads over the next few years. Second, the founding story. More Threads was created by a team that includes a former Nvidia China president and other engineers with long experience in global GPU ecosystems. Why should we care? Because in a system that is pushing strongly for localization, Beijing still needs people who understand how global GPU software stacks work in practice, what major AI frameworks, game engines, and enterprise customers expect, and how to translate between Chinese regulatory requirements and global developer habits. In Chinese business terms, this is a specialized form of guanxi, relationship capital built not just domestically, but within global GPU ecosystems. Nvidia's developer networks, game engine partnerships, cloud platform integrations. That dual network is rare and strategically valuable under sanctions. For someone allocating capital, that doesn't automatically make the company a winner, but it does change the probability that the company can build a viable software and developer ecosystem around its chips instead of shipping hardware into a vacuum. Third, the listing. When More Threads went public in Shanghai, its share price opened significantly above the issue price, and at the intraday peak, valued the company at north of $40 billion equivalent. To give you a sense of scale, that briefly put it in the same market cap conversation as established Chinese semiconductor names that had been public for years, despite More Threads being a much younger company. That kind of move obviously reflects excitement around AI and the GPUs more generally, but in China's case, it also reflects something else. Domestic exchanges and investors are being asked to help finance what policymakers view as strategic capabilities, including advanced chips and robotics. So you can think of the IPO as carrying two layers of meaning: a standard capital market signal about expected growth and profitability, and a policy signal that this type of company in this segment is aligned with the national industrial strategy and is likely to enjoy some degree of support. That doesn't mean the state guarantees outcomes or that price cannot fall, but it does mean valuations can embed a policy premium that is hard to read if you only look at earnings or benchmarks. Let's place More Threads in a group it is often associated with. Chinese media and the industry commentary sometimes talk about a small set of domestic GPU and accelerator firms that together form a portfolio of bets on homegrown AI hardware. The four are typically More Threads, its Chinese name. Each has different backing, technical approaches, and target segments. But together, they form Beijing's portfolio bet on domestic GPU capacity. Their focuses vary. Some lean more towards data center GPUs, some towards training and inference accelerators, some towards cloud graphics, but they share two features. They are trying to serve workloads that were, until recently, dominated by imported chips, and they are seen as strategically important in the context of US export controls. From a Western portfolio perspective, the instinct is often to ask, which one will be the next Chinese Nvidia? From Beijing's perspective, the more relevant question is, do we have enough credible domestic vendors across enough architectures and process nodes to guarantee some level of national compute capacity under sanctions? More Threads is one of the visible bets in our portfolio. Finally, we should be explicit about the constraints these companies face. Even with strong demand and policy backing, Chinese GPU companies operate under three big structural limitations that investors often underestimate. First, manufacturing. Access to leading-edge process nodes is constrained by foundry capacity and export restrictions. That can translate into lower performance per watt or less competitive cost structures, especially for the most demanding AI workloads. Second, software ecosystem. Nvidia's advantage is not just silicon. It's the CUDA ecosystem, libraries, and years of optimization. Domestic GPU vendors have to build or emulate that ecosystem, which takes time and a tight cooperation with major cloud providers and software companies. Third, customer adoption curve. Large Chinese customers, cloud platforms, state-owned enterprises, research institutions are under pressure to adopt domestic solutions, but they also care about performance and reliability. In practice, that often means a gradual transition. Domestic GPUs first in narrower workloads, test environments, or politically sensitive projects before they show up in broader production. As a rough reference point, Nvidia's A100 delivers over 300 teraflops in certain workloads. Meanwhile, public benchmarks place first-generation Chinese data center GPUs at a fraction of that performance. a gap these companies are trying to close over multiple product generations. More Threads is navigating all three of these constraints, just like its peers. The binary question, can it beat Nvidia, missed the point. The more useful question should be, what share of China's AI and graphics workload can be realistically served by domestic GPUs over the next 5 to 10 years, and how fast is that share growing? Let's end with the so what. For those managing capital, these GPU dragons serve as critical benchmarks for three structural themes that are reshaping how Chinese technology and policy risk are priced today. First, sanctions as a catalyst, not just a brake. Export controls reduce access to foreign chips, but they also concentrate political and financial capital on domestic substitutes. Watching how companies like More Threads are funded, regulated, and disciplined gives you a window into how China responds under long-term technology pressure. Second, valuations as policy barometers. Sharp moves around IPOs in this segment may reflect more than fundamentals. They often encode expectations about ongoing state support or industrial policy status. Tracking the relative performance of these names over time can function as a rough barometer of market confidence in China's domestic AI hardware strategy. Third, correlation, not just selection. Even for those with no direct exposure to these entities, monitoring how this sector responds to global semiconductor cycles and how policy shifts is a vital exercise in risk mapping. It helps you understand the sensitivity of the broader China-related landscape to external pressures and export control news. For operators and the technology teams, the angle is different. The maturity of domestic GPU options affects how you design AI products in or with China, which workloads can stay onshore, how you structure cloud partnerships, and how you think about compliance with local data and security rules. And for policy observers, More Threads is one chapter in a broader book. China is trying to build an AI and high-performance computing stack that works even in a more fragmented global system. GPU companies are one of the most visible places to watch that effort, because changes in funding, product launches, and customer adoption are relatively easy to track. The point of this episode is not that More Threads is guaranteed to succeed or doomed to fail. The point is that it is a signal about how China is trying to secure the hardware base of its AI ambitions and how domestic capital is being mobilized to support that goal. You've been listening to the China Memo. Primary sources, no noise. Today we used More Threads, one of China's 4 GPU dragons, as a starting point to understand how AI hardware, sanctions, and industrial policy intersect in China. I'm your host, and this has been the China Memo.